Good afternoon, friends. As you are aware, the volume 2 of the Economic Survey 2016-17 was presented in Parliament today by the Honorable Finance Minister. To tell you more about this important document, we have with us the Chief Economic Advisor, Dr. Arvind Subramanian. He will outline the context and make a detailed presentation on the highlights of the survey. I extend a warm welcome to Dr. Arvind Subramanian. We also have his team on the dais, Mr. Sanjeev Sanyal, Principal Economic Advisor, Dr. H.A.C. Prasad, Senior Economic Advisor, Srimati Archana Mathur, Senior Economic Advisor, Srimati Rajashri Ray, Economic Advisor, Mr. Anthony Syriac, Advisor, Mr. Arun Kumar, Advisor. I extend a warm welcome to all of you. Friends, after the presentation, as usual, the floor is open for questions. Please follow the points of order. There are placards kept in front of you. You can raise your placards. I'll call out one by one. And also a gentle request, please keep your mobile phones on a switch off or silent mode. Thank you, and over to the Chief Economic Advisor.
Oh, I see. Now, is that better? Yeah. Okay. First of all, welcome to everyone. Just wanted to check that we run through to 4:30, right? Which means that I don't know what your stamina is for getting bored. Parliament has just gotten over. So let's say we do half an hour, 35 minutes of presentation, and the rest for questions. Is that okay? Yeah? Yeah? So I take it that if halfway through I see you getting bored, I will rush through what I have to say. This is, as Mr. Narona said, volume 2 of the survey. Before I begin, I want to thank all those who have contributed to this. You know, the Economic Division of the Ministry of Finance, the coordinating unit, all my colleagues you see here. Some colleagues are having a great time in Berkeley who are not here as well on training. They too contributed to it. I usually thank a lot of people, but this time I think that I want to extend special thanks for Volume 2 to my colleague, new dream colleague Subhash Garg, for helping finalizing and shepherding this product to completion. I want to say that today Volume 2 was tabled in both English and Hindi, but Volume 1, a retranslation in Hindi was also presented, which was prompted by the fact that when Volume 1 came out, the response was very encouraging, but there was also criticism that the Hindi translation was clunky, not colloquial enough, and not as accessible as the English language version. There were two alternatives. Either I could have learned Hindi, or we could get a retranslation done by someone else, and we chose the latter. So that too has been tabled today, and for those of you who want to read that again, please go ahead and do so. Now, obvious question, why Volume 2, why now? So if you think about this, before this year, there were, in the last 3 years, 2 volumes used to be released. Volume 1, analytical, forward-looking, policy and ideas-oriented. And Volume 2 featured this sectoral review and included historic data. That, because the budget calendar was advanced, what we decided to do was to split it into 2 volumes. Volume 1, the forward-looking one, came out the day before the budget. And now we're releasing Volume 2 because now it covers the entire period of review, whereas when it used to come out earlier, it only covered 3 quarters. So that's partly why we've done this way. And I want to emphasize today a kind of historic achievement for which the staff of the Economic Division really needs hearty congratulations and thanks. For the first time, statistical appendices containing all the historical data are being provided online as Microsoft Excel files. So people all over the world, all over India, if you want to do research, go and check up the data. You will now have accessible, easily accessible, historic, lots of data as well. And I really want to congratulate my colleagues for this, a new kind of landmark that we've achieved in the survey. I don't want to bore you to take you through all the boring details of Volume 2. There are 10 chapters. I would urge all of you to read them very carefully. It's a lot of hard work has gone into it. There's lots of interesting reading. Today, I can't focus on all of them. I'll focus on what I think you'll be very interested in, hopefully, and cover that ground. But I do want to say a couple of things here. There is an Appendix 3 on how real GDP and real GVA are calculated. As someone who's kind of had to, work with GDP data carefully and given all the kind of questions that have been raised, I would urge all those watching that this succinct compilation of how the GVA are compiled in India is really terrifically useful to anyone who wants to understand what's going on. What are the indicators used for every sector? What are the data sources? And the perennial doggy question of what is the deflator, what is real, what is nominal, how do we go from one to the other, is really very nicely, cleanly explained. I would urge all of you to read that amongst everything else we've put out for you. Now, what is the outline for today's presentation? I think it's going to be in 3 parts. Part 1, the encouraging developments which augur well for the medium term. Second, the deflationary impulses in the near term, especially for growth and the big challenges that they pose. And the last part of my presentation is going to be on outlook and policies. I want to warn you in advance that today's presentation, I'm going to be more a kind of boring professor than a kind of maverick policy economist, because one of the things I do want to emphasize, something that I've keep saying, is that one of the jobs of the Economic Division and the Chief Economic Advisor is really to help all of us think through the big macroeconomic policy issues. And, there are things that I'm going to take you through today which I certainly learned as we, wrote this, and I hope all of you will benefit from that as well. There is new analysis and insight. Of course, there are also policy implications. So don't just focus on the policy implications, but also on, how to think through some of these very new and difficult issues as well. Okay, what are the encouraging developments in the short run? I think there is really rekindled optimism on structural reforms, and just to give you a sense of what they are, let me come to that. I think that's, I'm going to take you through 3 or 4 big items that I think has rekindled optimism. Second, I think this is something that's becoming more and more clear to me over the last 2-3 years, but now certainly, that we are possibly have seen a regime shift on macroeconomic stability. I mean, I think that macroeconomic stability, especially inflation and the external balance, have become entrenched, which really augurs very well for medium-term growth in India. Then I'm going to take you through demonetization. Remember, when Volume 1 came out, we said there are long-term benefits, there are short-term costs and impacts. Too early to tell then, but today I can provide you some provisional update on both consequences and the short-term costs. The other development, which I don't know whether it's encouraging or mixed, is about the financial market confidence and exuberance, which I'll spend a little time. And then we will go to the deflationary impulses and so on. Now, in terms of the encouraging developments, first bullet point, as it were, is really a series of structural reforms that have very positive medium-term consequences. Everyone knows about the launch of the GST. I have a personal stake in it, so maybe I'm a bit biased on this, but it's really a game-changing form, as we've all said. It's an astonishing feat of politics, administration, and technology that we write about in the survey. We should read that. But there's so much to be said on the GST, but there are two new things come around the threshold. So whether this increase in taxpayers will in fact lead to more taxes remains to be seen. A very encouraging development. In the survey volume 1, we had spoken about the short-term impact, and we said there's not enough data to measure the impact on the informal sector. Now, the first high-frequency chart tells you that basically we did see a growth deceleration beginning before demonetization, but that continued and maybe got intensified in the last 2 quarters of last year. Demonetization was associated with a deceleration of activity. We said in volume 1 that one way to look at this informal sector was to look at two-wheeler sales, which is what you see on the right-hand side top. And what that shows is, there was a decline after demonetization, but now it's catching up, and we're kind of almost back to where we were. So in this survey, we have very exciting new data and analysis on the impact on the informal sector reflected in the demand for Manrega work. And what you will find is that the patterns that we see are very similar to the patterns that we see on the scooter sales, i.e. there is an increase in the demand for Manrega as social insurance because of the impact of demonetization. That impact peaked between January and February, and in March, basically, we came back to where we were, just like the two-wheeler sales. So the short-term informal impact was felt, intensified, and then now has almost disappeared. So this is kind of exciting new data and analysis that kind of corroborates what we said in volume 1. Last development, which I want to focus on before I turn to the deflationary impulses, is that what we find is that, asset valuations in India have just taken off. Bond prices have gone up, reflected in lower GSEC rates, but the asset that's really taken off in value are stocks. Now, the Sensex has shot up, and critically, one way of measuring this, price-earnings ratios are now really very, very high, well above historic average, and close to the levels seen in the 2007-8 period. So the question is that people are wondering what is going on. I just want to say a couple of things about this. First, this phenomenon of rising asset valuations, stock valuations, is being seen all over the world, all emerging markets, even advanced country markets. And clearly, global excess liquidity has something to do with it. So I think we should all kind of keep that in mind when we assess this. Therefore, I think these valuations should not be seen as signaling something very important. This could just be temporary liquidity. And we know from all the history that when valuations reach such high levels, there is a tendency for them to revert back to normal levels. So I think we should be aware that this might happen and that asset valuations probably will adjust going forward. When and how? Of course, nobody knows, because if you did, you wouldn't be chief economic advisor. You'd be investing in the markets. Now, second part of the presentation is this is the near-term outlook for inflation and growth, which I think we need to really spend a lot of time and be very aware of as policymakers. And I'm going to talk about it in the context of the outlook for inflation and growth. I don't need to take you to all the data. This is just a chart which shows that thanks to the efforts of the government, the RBI, and technology and the weather and all those things, we've substantially overachieved on inflation. For the last 10 months, our analysis, our estimates are that we have done better than whatever target we set ourselves by about 150 basis points on average for almost a year, for about 10 months. And this is true for headline inflation, and we're also doing very well on core inflation as well. Now, this is what has happened. What is the outlook? We list all the factors that will determine the inflation outlook going forward. You know, the exchange rate has appreciated, which will reduce prices. The monsoon has been good, which will again reduce prices. But there are bottlenecks in fruits and vegetables, which might raise prices. The GST, I think, on balance, will reduce prices. Seventh pay commission the other way, etc., etc. And a crucial determinant, domestic determinant of inflation, is the output gap. Where is there slack in the economy or not? And that I'm going to come to. But if you put all of this together, our assessment is that end March inflation is going to be well within target, and average inflation for the year as a whole is going to be well below target. Even if we reach about just above 4% by end March, inflation for the year as a whole, which is the more important number, the average inflation for consumers, investors, households, that will be probably closer to the 3% mark than the 4% mark. And that's very important, you know, when we talk about what the policy responses should be. Now, similarly on growth, we know that there's been an across-the-board deceleration in real activity since the first or second quarter of last year. And I think it is quite telling that for the first time, many indicators which you see here, real credit growth, IIP manufacturing growth, investment, GVA, all point in the same direction of deceleration in growth. The question now is, what is the outlook? Now, here I'm going to be a boring professor for 1 minute, because when we think about India's growth outlook in a kind of big picture sense, where we are, one perspective on this is what is called the twin balance sheet perspective. This is a chart that shows credit to GDP for a number of countries that experienced a credit boom, growth boom, and then a credit collapse and a growth collapse. Carmen Reinhardt and Ken Rogoff of Harvard have this famous book saying that after this credit bubbles, we have deleveraging and growth slows down for a long period of time. And then when the cleanup is over, then growth picks up again. Why I'm showing this chart is to point to where India is. And the surprising thing is that India, we've not deleveraged at all, barely deleveraged. So in terms of the Reinhardt-Rogoff perspective, the twin balance sheet perspective, you know, it is, I think, almost premature to say or to think that growth can rebound very quickly unless we do and clean up and do the deleveraging in the first place. So I think this twin balance sheet perspective, the fact that we've not deleveraged enough, is something that we have to keep in mind as we think about growth going forward. Now, I want to go through 3 or 4 of the key and new things that affect the growth outlook. Farm loan waivers, item number 1. I'm not going to say good, bad. I think the governor of the RBI made some very thoughtful remarks on what it does to credit culture and so on and so forth. I'm not going to talk about that. The essential point I want to make, an analytical new point, is that farm loan waivers are going to be deflationary, not inflationary. In this survey, we calculate what the likely magnitude can be. You know, it depends upon a lot of assumptions that you make. It could be somewhere between 1.25 lakh crores and 2.7 lakh crores, depending upon how many states implement it. And it's going to be deflationary for the following simple reason and under one critical assumption. The critical assumption is that, as the finance minister has repeated, the center will not relax the fiscal borrowing limits of the states. If that is the case, then in order to accommodate the loan waiver, states will have to either cut expenditure or raise taxes, which will be deflationary. Now, this is not something I'm making up. Look at the UP budget. Go and look at the UP budget. Capital expenditure has been slashed by about 13%, if I'm not mistaken, to accommodate the loan waiver. That slashing of capital expenditure represents less demand, less growth. And it's because of the way the loan waiver interacts with the FRL limits, that we're going to see this deflationary impact. We calculate that the impact on demand could be somewhere between 0.3, 0.4% and about 0.7% of GDP, which will be a drag on growth. We also estimate what the fiscal impact could be, which is about, again, similarly, depending upon which states do it, which states have limits. You should go and see the table there. I mean, there could be some impact on aggregate state deficits because remember, those that are already at the limit, they cannot expand their deficits. Those that are not at the limit can use up the space to expand their deficits, and that's why aggregate state government deficits could increase marginally as a result. But the farm loan waiver is going to be deflationary, exerting a drag on growth in the short run, is what I want you to take away. Similarly, I think that another drag on growth in the short run is the rising stress in the power and telecommunication sectors. These are just charts that show you how much of the debt is getting, exposure is getting increased, and how it shows you both the profitability of these sectors in the aggregate and what the impact on the NPAs could be eventually. The key point here is that stress is rising, and what is interesting is that in both these sectors, stress is rising because they're experiencing shocks which actually are going to have positive impacts. In telecommunication, we know that there's a new entrant which is reducing prices to consumers. In the case of power, there's a renewable shock which is going to be very good for climate change, global warming, etc. But in the short run, both are going to have an impact on balance sheets of companies, and hence on demand, and hence on growth in the short run. Agriculture, again, we've seen a lot of stress. I think what people need to understand about this bout of what's been happening in the agriculture sector is that there is a puzzle going on, which is that we are seeing reduced farm revenues in the non-cereal crops despite a good monsoon. And that's the puzzle. If you look at the last 3 years, when there was a good monsoon, what has happened is output has gone up, prices have come down a little bit, but revenue has gone up. Similarly, when output has come down, revenue has come down. This is the first instance, or in recent memory, where you've had good output, good monsoon, and despite that, revenue has come down because prices have come down by a lot. And that's a bit of the puzzle. Why did prices come down so much? Is it because of some policies that restricted the access of farmers to where they could sell? Is it because of weak demand? Is it because of inadequate credit and liquidity? I think these are the questions that we need to answer going forward. But I think that it's very unusual to have both reduced farm, increased output, and reduced revenues, and that's again going to impact demand in the short run. I don't want to take you through all this. I want to rush through this. The final deflationary impact, of course, is that if you look at real interest rates and the exchange rate, real interest rates have been rising. They're high. The exchange rate, the real exchange rate, has been appreciating. Competitiveness has been affected. So both from the domestic side on monetary policy and the external side via the exchange rates, we are seeing a greater drag on growth. So how do I put all this together? To cut a long story short, the summary is that the balance of risks to the growth outlook has clearly shifted to the downside. I think one upside possibility is that more exports, because the world economy is recovering. To some extent, we had factored that in already into our February outlook. Maybe that could be surpassed. But on balance, the risk to growth has shifted to the downside. Therefore, the balance of probability has correspondingly shifted away from the upper end of the growth forecast that we'd made in February. So we're not changing the growth forecast, just saying that because of all these risks, it's less likely that we will see outcomes towards the upper end of the forecast. Now, monetary policy, I just want to provide you a technical assessment. I think, as I said, there's been a structural decline in inflation, and that's what creates the scope for lower rates. To the extent that these are temporary, as is being argued, then there's less scope. But on balance, I think there is scope because of these factors which have outlined the outlook and the structural decline. What we do in the survey is that we calculate what the neutral nominal rate should be based on the RBI's internal studies of neutral real rates, and we say that the simple calculation yields that those neutral rates should be somewhere between 5.25% and 5 and 7.5%. But here's what I think is something new I would like to say, is that when thinking about this from a technical perspective, the Taylor rule is a very nice way of trying to understand this. Basically, there are two steps to seeing what technically should be the interest rate. One is you see what should be the neutral rate when, neutral equilibrium rate means that your inflation is close to target and the economy is close to potential. And that gives this 5.25%, 5 3/4. But what the Taylor rule says is that over and above that, you have to factor the economic cycle. If you are at a stage of the cycle where there is a lot of slack, then the actual rate should be below the neutral rate. If there is very little slack, you should be above the neutral rate. And given our assessment of where the economy is, which is, we are still below potential. Capacity utilization is not as high as it should be. Therefore, technically speaking, interest rates should be below the neutral rate, so that if you then factor into where we are, it says that we have a scope for lower real interest rates. And this is the chart that shows that. A last point here, there is a lot of discussion about will it be effective, will it be ineffective? It is true that when you compare policy rate reductions with the base rate, the reductions in the base rate are not commensurate with reductions in the repo rate. But if you look at incremental lending based on MCLR, you find that, and go back to March 2014, you find that reductions in the lending rate of banks has been commensurate with reductions in the policy rate, and that's especially true for the private banks. So it is not, I think, totally accurate to say that reductions will not be passed through. There does seem to be passed through, especially for the private banks, and these reductions will affect all borrowers, including small and medium enterprises. So the bottom line is that there is scope. There is both need, because we are at a stage of the cycle where we have a lot of slack, and also that these things will be effective. That's what the data shows in terms of how much of these rate reductions have been passed on. I think the fiscal outlook, just 2 more minutes. Fiscal outlook, I think there are some downside risks. GST, uncertainty, growth outlook, spectrum receipts, 7th pay commission. Those are the downside risks. The upside risks are there as well. Compliance benefits from the GST, expansion in base from the GST, demonetization and the new taxpayers could provide upside risk. So, we'll have to see how fiscal, the deficit and revenues and expenditures evolve over time. And at some stage, it's possible that the magnitude and pace of fiscal consolidation relative to the commitments made may need to be assessed going forward. Last point on agriculture. I think that we tend to forget that over longer horizons, there is no necessary opposition between farmer interests and consumer interests. What I want to show you in these is that this table in the chart, especially the chart on the right, it's really amazing how how well farmers react to prices. If prices go down today, farmers plant less and supply goes down, and prices go up, so that on balance, you don't really get any benefits from lower prices. So this chart shows that, lag production and the WPI very highly correlated. And if you look at the data on recent plantings, you find that pulses plantings have come down because prices last year were down as well in the last thing. Same is true for oilseeds as well. So I think this is a perspective that we need to keep in mind, that farmers respond to prices and that there's no necessary opposition in the long run between farmer and consumer interests, especially in non-tradable agricultural commodities like pulses, fruits, and vegetables. I think that the challenge here is that We both need remunerative MSPs backed by effective procurement. This year, there was a big increase in procurement in pulses by about 2 million tons. But there were lots of states and in commodities where not all the crop could be procured at MSP. So we need...
Arvind Subramanian ji, as said by you, it was not at all boring. I didn't see anybody yawning. It was all rapt attention. So let's start with Timsi, 299.
Timsi Jaipuria from CNBC TV18. So very clearly, one thing that came out from your presentation, that do you still feel that 7.5% growth is too ambitious, as the risks are more towards downside rather than what you said, the only upside is from exports? Do you think 7.5% is too ambitious?
See, remember, it's also, first of all, I think we have to think in terms of probabilities, then, point outcomes, We've given a range because there is a lot of uncertainty. But what we're saying is that the balance of probabilities has shifted. So it's less likely than before, in my view, that we will reach the upper end of the range, unless, and of course it's also conditional on policy. If, for example, we can implement policies that can revive growth, whatever, monetary, fiscal, agriculture, then we can hope to go back to the upper end of that range.
Yes, yeah. Siddharth.
Sir, you've suggested a reduction in the rates. So should the government make the first move through a sharp reduction in small savings and other rates? And in this falling rate environment, how would you suggest that the interests of a lot of senior citizens, etc., who depend on deposits are protected?
Yeah, see, this is, I'm glad you asked that question, especially the second one. There's a very simple answer to that question, right? Which is that if you do not and you should not suffer from money illusion, what matters, if real interest rates matter to borrowers, real deposit rates matter to savers. If inflation comes down, then, because remember, any saver has alternative uses for his savings. And the way to think about it is, what are the real returns to that? So if, for example, your deposit rate is, say, 7% and inflation is 3%, and then if inflation goes from 3 to 1%, that 7% is really worth a lot. So it is not right to say that reducing nominal rates will hurt savers if all nominal rate reductions are doing is to track inflation declines, because that's also benefiting savers.
Yeah,
Lakshman.
Yeah, on the small saving, I think the government has taken decisions on that. I think government policy will be to keep in mind what they're doing for small savers. But I don't think at this stage that is what is critical to the whole monetary transmission and so on.
सर मैं लक्ष्मण CNBC आवाज़ से डिमोनेटाइजेशन पे आपने काफ़ी ज़्यादा विश्लेषण किया है। इस नोटबंदी को आपके इस विश्लेषण के बाद क्या माना जाए कि सरकार अपने मकसद में नोटबंदी के दौरान 100% सफल रही, 50% सफल रही, इसकी सफलता का आकलन कैसे करेंगे आप?
देखिए आप ऐसा है कि जब हम when we examine any of this, there is no one ये 50 correct है कि 60 right है कि 100 correct है कि 0 correct है, because there are different impacts. देखा cash पे देखा, I mean surprised me, 20% reduction in equilibrium cash. It was a big surprise. It was the objective. Similarly, digitalization, जो taxpayer का मैंने data बताया था, that also came as a very pleasant surprise. But then on the other side, you also have the informal sector impact. So I find it very both difficult to reduce it all to 100% success है कि 0% success है. Success भी है, cost भी थे, and they're all true. So I don't want to reduce it to any one number.
Yeah. Sir, Sapna from CNBC TV18. Just two quick
Just speak into the mic. It is all right.
Please feel free to join in.
Yeah. Just two quick questions, sir. Yesterday, even you have said in your survey about possible uncertainty on the fiscal front in the current financial year, and you have listed out the reasons for that. Yesterday the dividend announcement by RBI has also seen a sharp reduction. 58,000 crores was the estimate, come down to around 30 odd is what we're looking at as of now, though we don't know, what if they revise the number upwards sometime down the year. So that's one side. Any concerns on that front? Does it really paint towards any kind of a fiscal worry down the line? Because right now revenues are okay. And sir, one quick question on the growth front. Your survey has also sounded out alarm bells on the farm loan waivers, and you have said somewhere in the first chapter itself that possibly 0.3% will be affected in terms of the GDP forecast in the current year, if this really goes forward. So, can we look at some kind of an estimate on the GDP number for the current year from you?
Yeah, on the first question, remember that the RBI dividend has come down, but is in line with what was budgeted. So in that sense, it doesn't represent something new. It's in line with the budget, yeah?
Breakup. So it's around about 3,600 as of now.
Yeah.
I mean, do we expect some revision upwards probably then?
I mean, those are discussed. But the key thing, the question you're asking is that, is this a fiscal shock? And I assess shock relative to what we budgeted. And I think relative to that, there's not been, as far as I know, any shock. On the second, again, whether you want to say I'm alarmist or not alarmist, that's for you to, all the adjectives are for you to use. But this is just a simple macro calculation of, if you have loan waivers, what happens if the FRL kicks in? By definition, it's going to be demand contraction, and we estimate that as this. And that's the reason why we're saying that the balance of risk has shifted to the downside.
Yeah. Sir, Arup with Business Standard. You, in your survey, in today's survey, you spoke about how some social policies and social trends are impacting certain sections of the agricultural society. So is that are you clearly, they are talking about the anti-cow slaughter rules and the atmosphere of fear through Gaurakshaks and all that? And secondly, sir, even after the Monetary Policy Committee's recent 25 basis point cut, you have still made a case that there needs to be further monetary easing. So ideally for this fiscal year, how many more basis point cuts do you think we can go for?
You're very mischievous. You want to get me into trouble on both scores. On the first one, I will say that the expert on the subject is now attending classes in Berkeley, so unfortunately he won't be able to respond to that. I can certainly ask him to get back to you on the first question. On the second question, look. The Secretary of Economic Affairs clearly said that, after the thing that, we positively support, the cut, but also saying that there's, convergence for more. So this is a technical assessment which says what could be the potential scope. Timing, magnitude, all of that is up to the Monetary Policy Committee to decide.
Yes, yes.
सर, आपने नोटबंदी की चर्चा की और शॉर्ट टर्म कॉस्ट की बात की, आपने इनफॉर्मल सेक्टर के इम्पैक्ट की भी बात की। एक जो आलोचना सबसे बड़ी है कि नोटबंदी की वजह से काफ़ी रोज़गार चले गए हैं, इसका कोई असेसमेंट हमने इस सर्वे में वॉल्यूम 2 में नहीं देखा है। ये हैरान करता है। क्या ये माना जाए कि इसका कोई असर रोज़गार पे नहीं पड़ा है?
देखिए, मैंने पहले भी कहा था कि as it is, our data on the informal sector is quite poor. और जहाँ से हमारी employment की data है, that's even more, we're still making, and that's why Dr. Panagria has headed a committee to talk about employment. So it's actually very difficult to do that. I thought you were going to pay us a compliment saying, wow, even though there was no data, you came up with a very new and ingenious way of actually measuring the same thing. So I'm disappointed that you didn't give me a compliment and are criticizing me instead.
Yeah. Sir, I'm Shomik from The Week magazine.
Sorry?
Shomik from The Week magazine, sir.
Yeah.
So I have two questions. One is related to any reflection the survey has on agriculture, cost of agriculture. That seems to have gone up, cost of agriculture.
Cost, meaning prices, you mean?
No, sir, the cost of agricultural inputs.
Inputs?
Yeah.
Like what? Like
the fertilizer, the seed, and, insecticide.
Fertilizer, the GST rate has come down, my friend. I think, see, remember, oil, energy prices have come down. Fertilizer prices after the GST have come down as well. So if anything, it's going in the other direction. So I'm not sure why you say input prices costs are going up.
Sir, second thing is about what do you think will be the GST impact on exports, if there is any reflection on that?
Yeah, I think that's a very good question. Huh? A very good question. You see, remember that in the old system, we had elaborate drawback, right, in order to offset the embedded taxes on exports. So, for example, in June of 2016, we had a package for clothing, part which increased the drawback, part of which was in order to offset the impact of state VAT embedded in exports, right? The beauty of the GST is going to be that because we're going to zero rate zero rate exports, and because input credit will flow more freely, therefore, my expectation is that the export regime is going to become less distorted in favor of more exports. So I think it's going to be an unambiguous positive from the GST regime.
Yeah, please.
Sir, this is Surbhi from the Hindu Business Line. Two quick questions, sir. Sir, in the survey you've spoken about key exclusions in GST relating to electricity and also about the low rate on gold. Do you think that it is possible to bring them into GST anytime soon? And secondly, survey has also been quite quiet on the issue of job creation in the economy, sir, because there's a small section on employment, sir. So what is your view on job creation? Are we seeing, like, is employment keeping pace with the entry into the labor market? Thank you.
See, the first question was on the GST. See, remember, my views on this are very clear that I mean, this is terrific first achievement, first step, but the two major challenges going forward will be the exclusions, which you mentioned, and also the structure of rates. I think that several people have said that there is nothing that prevents the GST Council going forward from tackling all of these. You know, for example, land and real estate, there were serious discussions, the GST, and the finance minister himself said that this is something that, you know, we should and try and take up quite quickly. So my own view is that, you know, we need to let these things stabilize a little while. You know, we can't keep making changes every day. We need to allow it to stabilize, see what the impacts are, and then start the process of, you know, improving the GST. And in the council, I mean, I've been witness to the council proceedings. We have just a remarkable institutions where, you know, good decisions are taken. You know, states do rise above narrow state interests. So I am very hopeful that going forward, that the necessary changes in the GST can and over time will be made.
Sir,
the second question. See. Again, all of you who expressed disappointment, there's I almost detect, you know, you deliberately didn't do this kind of thing. And I want to reassure you that just as you said about the informal sector, so about employment, look, we don't, I mean, really have good, reliable, consistent series of data to be able to say, you know, with some degree of confidence that, you know, this went up or this came down. I am hopeful that once we, you know, really improve our employment data, I think we will be able to do those things much better. And remember that even, you know, low frequency employment data are, you know, need to be improved. High frequency employment data are really very difficult. You know, it's really challenging to be able to say anything based on high frequency employment because we just don't have that at the moment, and to say anything with any degree of confidence.
Sir, मेरा नाम मनीष है. सर इधर this side.
हाँ.
सर, मेरा सवाल ये कि जिस समय सर डीमोनेटाइजेशन का ऐलान किया गया, उस समय तमाम ये चर्चाएं हो रही थी कि सरकार को एक बड़े विंडफॉल जो है गेन इसके चलते मिलेगा. लेकिन कल जिस तरीके से आरबीआई की तरफ से आंकड़े आए, ये कहीं ना कहीं निराश करते हैं.
देखिए, see, I think that मैं हिंदी में थोड़ा, इंग्लिश में, अंग्रेजी में थोड़ा बोलूँगा, ठीक है? You see, I think that when we think about the windfall from demonetization, I think that this windfall can manifest itself in different ways. मतलब तरह-तरह के windfall हो सकते हैं. One is कितने note आए या नहीं आए, that's one. Second is that Joe, for example, if taxes go up as a result, or if we have new taxpayers, that also is a source of windfall. And certainly the data that I showed on new taxpayers is encouraging in that regard. But again, it's something that we will have to track over time. एक चीज I think we should all remember is that जो benefits हैं या costs हैं, all these will have to be assessed over time. आज का जो picture है वो कल बदल सकता है, परसों फिर बदल सकता है. So I think we have to assess this over time, and you have to keep in mind that windfall can happen or not happen. We don't know, in different ways. It's not just how much money did or did not come back, but also how much taxes, how many new taxpayers there have been, what the digitalization has been, how much cash has come down. All these go into assessing what the windfall is.
I'll come back to you. We'll go to this person here. Yeah.
Hi, sir. Us from the Hindu. So I wanted to get a sense from you on the medium-term.
Speak into the mic. Yeah.
Medium-term economic framework that the finance ministry released yesterday. It talked about the need to review the effective revenue deficit targets going forward. And today you've said that the magnitude of commitments that you've talked about on fiscal consolidation front need to be reviewed. And obviously the overarching focus is on short-term growth being picked up. So are you in a way advocating greater pickup in public spending to prop up the economy?
Look, two things. I mean, Anthony, you want to say something on the medium-term framework? No? I mean, I think medium-term frameworks are a very good planning and budgeting device. So I think it's great that we're moving in that direction. Now, the diagnosis is that there are short-term deflationary impulses. There are challenges. We need to do all that we can, and I think certainly a big policy lever that we have and that we have set in motion is the actions to address the twin balance sheet challenge via the bankruptcy thing, because that's what will clean up balance sheets, create demand, create the supply of credit, and so on. And then we have other levers, monetary policy, fiscal policy as well. Now, all of these come with benefits and constraints. Monetary policy has its own constraints, fiscal policy will have its own constraints. But I do think that the one thing I would say is that if we get a fiscal bonanza based on GST revenues, I certainly think we should think about spending that consistent with our deficit targets and deficit objectives.
Yeah, Madam.
Hi sir, this is Audrija from ET Now. I had two questions. I think in your survey you made really clear that private investment is still subdued, credit offtake is low. So that we haven't found a solution yet. It's almost like the issue of the private sector, banks, NPA stress. It's been going on, and finally an ordinance has come, but a real solution hasn't been discussed or debated yet. And my second question is that a lot of positives when it comes to GST has been written, but is there an estimate of what kind of revenue do we see once we see the numbers coming in owing to GST, considering the fact that maybe the finance ministry is also a little troubled about how much compensation they might have to pay the states, and whether with the cess coming in, they'll be able to reach that level. So is that, those two questions, those are real concerns, and what kind of solution can we see?
See, on the first question, to say that we haven't discussed the solutions to the twin balance sheet problem, I think that we make reference actually in the monetary chapter to what actions have been taken on the whole bankruptcy thing and where we stand. Clearly, it's too early to assess the outcomes of these things because these have just been started. So, you don't have a track record or data to say whether it's, how much it's working, how much it's helping, so on. So these are things that we'll have to do, over the course of the next few months, and then we'll have more data to assess that. On the GST, remember that the first, you have to be very clear here. The first set of GST, revenue filings will come end of this month, right? Then remember, the invoice matching begins afterwards. So to say, to get some plausible, confident assessment of what the GST revenue impact will be, will again take time because it's a new system, by definition. And I am very optimistic about the invoice matching, but that's going to start later. So we'll have to see. But the early evidence on the new registrants is certainly a positive sign in terms of what it might do to the tax base.
Yeah, please.
Good evening, Sunny Verma from Indian Express newspaper. Sir, towards the end you spoke about need for direct support to the agriculture sector. So can you elaborate, are you talking of doing away with MSP or other subsidies in the agriculture sector? And second question is, the 5.4 lakh new taxpayers that you identified have been added due to demonetization. They are almost paying negligible taxes, as you argued. So the expansion is in the tax base. Has that been more of imaginary than real?
See, I think on the second question, look, it's real in the sense that, remember that, see, and this is one of my favorite topics of, in my research as well in economic development, that when you think about economic development, a key feature of that is more and more people becoming part of the tax system. So you get a lot of gains just from being in the system because you feel you have a stake, you want to hold government accountable, and so on. So the fact that there are more taxpayers is not imaginary, it's very, very real. The second thing is that, will they actually start paying taxes? One kind of slightly cheeky thing to say is that, as inflation keeps rising, a nominal tax means that you do nothing, more and more people will come into the tax base automatically. So I think that's going to be a benefit over time. So it's not imaginary at all. Maybe it's not as rapid as we should have it, but over time it will have clearly benefits. And so to me it's almost as important to get people into the tax net and filing as it is for them to pay tax, because that will gradually happen over time. Your second question was on agriculture. I am not saying anything with any degree of strength or anything. I do think that we need to reflect on this. Is that I gave a lecture. I would love you to go and read it. My National Academy of Agricultural Sciences lecture on agriculture more broadly. I think that in India we have what I call two agricultures: an agriculture that we love too much, and an agriculture that we don't love enough. I think we love the cereals too much. We love pulses, fruits and vegetables not enough. And I think that, therefore, we need a broader reassessment of, what are the policies that can really, boost agricultural farm incomes that, the objective that the Prime Minister has set. It has to be more procurement, better MSPs, it has to be better prices, but in the policy mix, we also have to ask whether, some forms of direct support could be part of the policy mix or not. I think it's a good time in the context of all this farm stress, especially because this farm stress has happened, as I said, the puzzle, at a time of plenty. When there's scarcity, there's farm stress, you know what's going on. But to have this at a time of thing, we need to then carefully think about, how we should, think about agricultural policy going forward.
Yes,
yeah. Sir, this is Mahua from Hindustan Times. I just wanted to ask you, in the earlier economic survey, you had prescribed a very drastic step to address the NPA problem, setting up a bad bank. Now, nothing of that sort has happened. Of course, the government and RBI have taken a series of measures, but do you think that's going to solve the problem? And considering you have also said that, the power and the telecom sectors pose further problems in this entire picture.
John Maynard Keynes famously said, when the facts change, I change my mind. What do you do, sir? I certainly think that, the steps taken are, very welcome. I think you have seen some very positive developments, 12 accounts, 11 already. I think the things have been entertained by the courts and so on. So I think we should give time for this to play out, because it is a very serious, bold initiative that both the government and the RBI have taken. At some point, I think we also may have to see how to accelerate, supplement all these things, and we have some discussion in the survey on that. But for the moment, I think some new and bold actions have been taken. We have to see how they play out before we can come to any conclusion about, should we do something else or should we, whatever, was the earlier idea better or worse? So I think we should give some time for that.
सर ये इकोनॉमिक सर्वे के पेज नंबर 225
आप तो बहुत जल्दी पढ़ते हैं।
नहीं थैंक यू। तो उसमें एक बड़ा ही नया आइडिया दिया गया है, ट्रांसपेरेंसी ऑफ रूल्स एक्ट टोरा। तो वो आखिर क्या है, आखिर क्या इसके जरिए क्या हासिल करना चाहते हैं हम लोग?
संजीव।
Okay, the Transparency of Rules Act basically is an attempt to change in some ways the relationship between the average normal citizen and the state. All forms of governance are based on the citizen is expected to follow the rules. Unfortunately, in India, for a normal citizen, very often the rules are not so transparent. We don't know what rules we are supposed to, the average citizen is expected to follow. Now, when I'm saying rules, I do not mean the grand laws that are debated in parliament or in the assemblies. These are the administrative rules, procedures, forms that you as a citizen have to follow. So what this proposed act is that it asks for a legislation that will do the following three things. First is that we expect every department that has a citizen or business-facing interface to put all the rules, procedures, forms, and other things onto a website. And once that department is declared TORA compliant, what happens is that only the rules that are on that website are considered the rules. So for whatever reason, if the department happens to have left out a certain rule, the citizen will not be expected to follow it. Now, this is actually quite a big step. But basically, it changes the asymmetry of information between the citizen and the department. That's one. Secondly, all rules, etc., will be presented in the form in which, as a whole, and not as a series of circulars. One of the reasons the rules in India are very, very confusing is because there may be some original rule, and then there are a series of circulars. So you have to really spend years going through all the circulars and actually then find out what the current state of play is. What we are saying, just like with Wikipedia, you can have the current state of laws as being the first thing you look at. And of course, there is a history. There can be a history button, and you just go through so that you know that on so-and-so day, at so-and-so time in the afternoon, what was the rules that the average citizen was supposed to follow. So that is the second element. And the third element, which relates, is that every time the rule is changed, there is a time that flashes at when that rule was changed. So in a sense, unless otherwise there's some reason to have some sort of retrospective rule, which will happen hopefully very rarely, the citizen will only be expected to follow the rule after it has been promulgated and the time is clearly given, so that there is no dispute about the point from which the citizen is expected to follow those rules. Basic idea overall is to change the asymmetry of information between the citizen and the state as far as what rules, when I say that, the administrative rules, the average citizen is expected to follow. So this is just a proposal up for public debate, and if people like it, we will do something about it.
Yeah, last question.
Last question.
My question is for the Chief Economic Advisor. You mentioned that there were 5.4 lakh additional taxpayers, but they were filing returns around the IT threshold, right? Now, there's a view among tax experts that basically, after demonetization, there were a lot of reports about Jan Dhan accounts being used to deposit black money and convert. Now, there's a view among tax experts now that these if these new IT returns are being filed at the IT threshold, it's basically to complete the loop and avoid suspicious kind of calls from the tax department. So the real test on whether this is an additional this thing will be next year if this sustains. So your view on that?
No, I think that's a very good point. It's a very fair point. And that's what I meant by saying that, I do think that once you've come into the tax net, then of course, you have to be compliant. So, and that's why I think the benefits of that will become apparent over time. So there's huge value from just getting them into the tax net, even if this year you don't get a lot of money from them. Thank you.
Thank you, Dr. Arvind Subramanian ji, and all his team. I extend sincere thanks. And friends, thank you for being here. Please join us for tea on the 4th floor.
Thank you. Thanks very much.